Just last week, our digital assets team released a deep research report outlining the Ethereum merge, with everything from the simple comparison of proof of work to proof of stake, tokenomics behind the merge, and also ways traders are taking advantage of this event. So if you haven't checked it out, highly recommend. We'll link it in the description. But today we're meeting with Mark Newton, our head of technical strategy here at FS Insight. And we want to know about price and what's going on with the technicals around this event.
Hi, everybody. Mark Newton. Let's talk cryptocurrencies, Bitcoin and Ethereum. So a pretty big reversal back lower in crypto over the last 24 hours. A lot of that directly coincided with the weakness we saw in the US stock market and globally. I think that's still the rule of thumb, that the correlation is still quite strong between crypto and equities, except there's obviously a lot more volatility in the crypto market. So we saw a pretty big reversal, of course, in most of the US indices yesterday. This directly followed suit. We saw both Bitcoin and Ethereum drop pretty sharply. And, those attempted to stabilize a little bit today. But you see this area where we actually peaked out yesterday in Bitcoin, right near 22,781. That was actually very important because it not only was it a 61.8% Fibonacci retracement, but also it hit exactly at this declining, really 4-month downtrend in an area where it needed to. And if we draw a trend just under recent lows, we can see that it rallied right up to sort of kiss that little trend line that was broken and was immediately repelled. And that's also an important concept in technical analysis. Volume picked up yesterday. For those that want to delve even further into time as to why we reversed where we did and why so violently, if you count the trading days or calendar days from June 18th, where we bottomed, up until August 15th, and we have a 58-day rally. Well, half of that in time, of course, 29 days, gives us exactly to where we turned yesterday, and it's an exact 50% time retracement. So when these retracements happen, it's not about the price terms, it's also about time coming together. That's why they're meaningful, that's why they work. Most Fibonacci levels in price are meaningless without time. So this 50 is a big Gann level. It's not Fibonacci, but the bottom line for Bitcoin, I think we are going to see further weakness into the end of September, early October, coinciding with a similar move in the equity market. And so I think that we can't rule out, a break of September lows. We got down there 18,540. Under that could take us down, at least to, challenge June lows, 17,592. You just do basic projections just based on the length of this first move down to August. And normally, you want to track these in price and time. So the most common areas are going to be 13,800 to 14,500. That's a big level. That's pretty far down from where we are. But initially, 16,300 would allow these two declines to be equal. So that's also key. Importantly, when you take a look at the cycles, this should start to turn pretty sharply higher over the next couple of years. We are right now still in a very big down draft that happened obviously in the tail end of 2021 in November, when we peaked, and this is still ongoing. We've really been churning of late. Until the equity market can bottom out, I don't put a whole lot of faith in crypto being able to work its way higher, particularly Bitcoin. But the path, for the years ahead does appear, pretty bright. I think that after a brief downturn into early 2023, that really sets a stage for a decent, almost a 2-year rally in crypto, and Bitcoin should do well. In the near term, you see how this cycle looks. I just look at a shorter term time frame, and it's been very, very choppy. So even though you might see a little bit of a bounce into November, still very tough to make heads or tails of this being really meaningful. It looks almost directionless, but we really want to latch on to the longer term weekly cycle when this finally starts to kick into gear next year. Finally, I would just point out that looking at traditional DeMark tools for trying to pinpoint a bottom, normally very important. They did give us, the peak, of course, that happened last spring. We did see lows that materialized back in June, a little bit of a bounce, not much. Now we're on a 10 count and a setup count that's a 5. What does that mean? Well, another 3 weeks down would actually give us a very good buy signal in Bitcoin. And that is important and interesting because the same cycles are happening right now with US stocks. They're saying within 3 weeks that we potentially have at least an initial bottom to this decline. So if crypto happens, we're seeing the same thing with treasury yields on the upside, 3 weeks away. Crypto with Bitcoin, 3 weeks away on the downside. So I really want to hold off on getting too aggressive until we get down really anywhere near those prior lows from June. That would be a great area for buying and holding. But I want to see this buy signal materialize on Bitcoin and see if we can try to bounce out of this. Let's take a look at Ethereum real quick, because this is obviously a pretty big outperformer in recent months leading up to the merge. Now Bitcoin actually took the lead as of the last week up until yesterday. You still see that this minor uptrend just from late August still intact, but unfortunately, I think Tuesday really was a game changer for this in the near term, and this is likely going to see similar weakness as Bitcoin and many other cryptocurrencies. So I'm looking, any really break of September 7th lows of 1490 should take us down to near the 1400 level. I don't think if this is tested that it will hold, but I think we'll likely see weakness into October, down near maybe even 1187. That's a really interesting level. And that would allow these two moves to be equal. Below that, I'm not expecting, but we can't rule it out, would be 957. But really, the key message here is that any weakness over the next 3 or 4 weeks into October should mark the next tradable buy time for cryptocurrencies, when one can really buy dips and expect a rally up into November, December. In the bigger picture, important just to look at this longer term chart where cycles do tend to turn up pretty sharply in 2023 into really the middle part of 2024. So we'll see if that happens on schedule. For now, I know it's been frustrating to be long crypto as well as equities. It's been a really tough year to own anything outside of the US dollar. But there is some evidence that the dollar is going to peak out, in my view, in the month of October, along with yields. And I think that should bring some strength to the crypto market. So thank you for tuning in, everybody, and have a great day. Take care.